So after making that 2-point trade earlier in the day, we could have walked away. If we were trading 10 contracts, we could have walked away with uh, what, $1,000 profit minus what, $10 for your brokerage fees. Or if you're trading 20 contracts, you could have walked away with a $2,000 profit. But we hung on for a period of time throughout the day, not really seeing any other setups. But what we have coming into play here is we see this resistance that was being met right over here in this level. Price went up, broke up a little bit. You see this. You see the wick that went up there. We had a price rejection. The little price was tested up there. A new high was tested. It was rejected down a little bit, and it came down. We got a trend reversal error or arrow that we didn't really want to act on. There was nothing else telling us to really trade. And then we see the price come back down into that same consolidation range. Right up here, it really doesn't want to break past that about 1638 level. And it goes down and tests the lows at about 1636. But what we have here are several wicks in a row. And what makes these a little different is that you have 1, 2, 3, 4 tests here that were rejected right in a row, and they all closed a little lower than the previous one. That's a little different than this consolidation over here to the left, where we had intermittent bull candles and then bear candles and bull candle, bear candles and bull candles. So we have a consolidation of these bear candles here with these wicks up, giving me a price rejection. At the same time, just in terms of confluence, let's take a look at this price histogram to the left. You see it's kind of a skewed P up here. We have some time frames in here that might want to be filled in. At the same time, at the bottom, when we're looking at the volume, you see our volume has really dropped off. Of course, it's after lunch. So all of these things combined, and looking at these moving averages coming down a little bit, I might want to. We might be seeing this 20-minute average cross that 90-minute average here pretty soon. So what I'm looking to do is I'm going to look for a large down movement, because we opened up way down at 1618, almost 1619 earlier in the day, on the open. So we might be headed that direction just on a pretty large drop, because these prices aren't being hit up here. So what I'm going to do is I'm going to look for the market to go down around 1635.5. That's right here. That's below this support level. Because if we break this support level, I might be looking for a big move. If we don't hit the 1635 level, and I place an order for that, and we go back up, then I'm going to set a stop up here at about 1638.25. I'm going to set it up above this level. So if I go down and hit this 1635.5, okay, I might look for a little bit of retracement, and I'll get out at about the 1638 because it could take off. So I'll have about a 3-point stop there. I could get stopped out, but if the move takes off, it could be a really big profitable move. Now it's a lower percentage type move, but for tracking purposes, I'm going to go ahead and make that. I'm going to go ahead and enter my order at 1635.5. I'm going to enter. I'm going to sell. So I'm going short, and I'm going to place an automatic stop at 1638.25 when that order fills. So let's just kind of wait it out here. What else do we have going on? You'll notice the time frame, the number of bars here in this consolidation is about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 time frames, right? Then we have another consolidation here of about 10 times. Oh, it looks like we're making a move down. Here at the 16, we're down to 1637. So we're looking at this 1, 2, 3, 4, 5, 6, 7, 8 bars. So I'm a couple bars short of what it has been consolidating at. But again, our volume, if you look over here, is pretty low. We have a pretty significant drop here. We're down at 1636.25. So 1636.50. So what I'm looking to do is I'm looking to break this level here, about the 1636 level, get down to, if once it breaks that level, it may be making a break for it at about the 1635.50, and that's what I'm looking for. We have a little bit of we had lowers. It's going up a little bit. We're going to watch that kind of close. It'll be interesting to see what goes on here. We had a really nice bull market going on today. Really nice bull market. Typically, if we're above those moving averages, we want to place our orders on the long side. We want to go long. Here we go. I filled at 1635.50, and my stop is at 1638.25. So I filled right here. My stop is up here at the 1638.25. Why did I put it at the 1638.25? I didn't want to put it down here at what might turn into be the a ceiling. I wanted to go a little bit past it, but not too much, just in case we go backwards. I don't want to lose too much money because this is a low percentage trade, remember. I'll take a little bit of water. It's been a little bit of a long day today. And over here, while this is doing its thing, taking a look at this price histogram. Remember, we don't really trade on the price histogram, but the price histogram just kind of keeps me grounded in terms of what's been going on throughout the day, where the prices has been, and how the distribution of the prices is. When we're talking statistics, most things kind of pan out to be a normal distribution statistically. So we wanted to see a nice bell curve here, which means these prices in this area might want to fill in. Does it mean they're going to fill in? No. We could skip right past those prices. See, we're down here in this area now filling in. None of these historical, statistics, that's history. That's something that happened a while ago. And these indicators are all lagging behind this price action that's going on right now. We're down to 1635.25. So I'm at 1635. So I'm about a half a point into it. And we'll watch that pretty carefully to see when we want to get out. Once we start testing levels, I might move my stops down. I might just let it ride. I might move my stop down a little bit past break even. We'll see what we want to do here in a moment. We'll just kind of watch it. You see the ergodics down at the bottom are kind of supporting what's going on. We have a 10-minute ergodic that's changing for the long-term trend. We have the 5-minute. We have the 3-minute that's straight down, and we have the 1-minute that's straight down. Some people, when they're talking ergodics in these charts, a lot of times they'll say, oh, the ergodics are going straight down, it's changing the price. Well, actually, the ergodics is lagging behind the price. It's not a cause and effect. A lot of people will say the ergodics are affecting the price. That's not true at all. These ergodics, a lot of price action people will just be looking at these candlesticks. They don't want to see the ergodics because this is lagging. But this does give me an idea of the trend over a period of time, and I've been looking for some systematic approach in there, and it helps keep me focused. In the future, we may do away with these ergodics within the chart. I'm thinking about maybe moving my volumes over to reflect the actual price action going up there. Since our volumes are low and we had such severe testing all the way from this area all the way here, you see that strong support level. The support level, strong resistance level. The resistance level did go up a little bit, but really it was kind of staying in this area. And the 20-minute moving average or exponential moving average, EMA, never got above that level. The price is down at 1635 now. You see it's tested way down here into this area, into the 1633 and a quarter, that area. We have a bit of a green going on. The price went up a little bit from where the entry point into the candle. Price is going up. That scares me a little bit, but since we did break this support level, I'm just going to hold on. And if I take a 3-point stop hit, that's okay. We can't you can't really trade with scared money. You can't be a fool, because a fool and his money are parted. We are trading against the trend. The trend is very bullish today. However, we might expect, since our opening was so low, we took such a large ride, and there was such aggressive testing of these ceilings, we might expect a little bit of a drop here, and let's see if it's still consistent. I'm back at break even now. One of the things that we don't really want to do is, there's nothing that's indicating to me that the price is going to go back up to where it just came from. These downward tests right here, these downward wicks, are pretty aggressive. They're pretty aggressive. And I don't see any evidence of it moving in the up direction. So I'm just going to hold tight for a while. You don't want to chase the market. You just don't want to chase the market. Make a decision, a good entry point, a good exit point. One of the things I didn't do on this particular trade is really figure out a good exit point. I think maybe around 1630, because we see the support level at 1630. Again, we have another support level here down here about 1625 that was a very, very long run. So I'm really kind of looking at a target around 1625. If we can get past the 1630 level, it may go down to 1625, and that's something that I would really like to see. We're only in our third candlestick into the movement down. We just hit 1633.50. So at that 33.50 area, I'm 2 points to the good. And we're really looking at that 1630, 1631. See what happens if it goes down there. You'll notice that there's not a lot that went on in this area here. If we draw a line straight across, we'll see that there was a little high level here, a little high level here. But really nothing happened recently. Nothing's happened since, and this was early morning. So really nothing's been going on. For those of you who play the moving averages, which again, we want to emphasize price action here. Every day in this trading room, you receive an education. You receive experience. Hopefully, you receive some good tools. A lot is repeated, and that's the way we learn, through repetition. So we'll talk a lot about price action and the importance of those candlesticks, reading what's going on. Looking for patterns in the trend. Earlier we traded a nice pattern. Right now, I was trading the price levels and the action that we were getting up here, and how that action resembled this action over here in terms of time frame and whatnot. But to support that action, remember, I went over and I looked at the volume of trading, how the volume went down. The volume's gone up just a little bit because we've had some downward momentum. And that increase in volume supports that momentum that's going downward. We're down at 1634 now, which is 2.5 points where I sold. And it looks like it's continuing to go down. You'll notice the bear trend. We have 1, 2, 3, 4, 5, 6, 7, 8 candlesticks. Well, this last one hasn't closed, but we've had 7 candlesticks in a row that were bear candlesticks. If you look at the patterns earlier in the charts, you know, where do we see the large trends when we have several candlesticks in a row that are the same? You know, either in this bull area. There's another bull area here. Here's a little bear run. It had one little bull candlestick, but we had a little bear run there. We had a nice little bear run here. And we got a nice little bear run going on right now. What's going to happen? Frankly, there's nothing on this chart that can tell you what's going to happen next. You just don't know what's going to happen next. But what you can do is you can mitigate your losses, and you can look at the probabilities. And, you know, this was a low risk, or this was a low probability trade. But looking at the support levels, looking at the various resistance levels, and the type of trending that's been going on today, you know, I identified a definite pattern that could take us on a nice little bear run, and let's see if that happens. The length of that bear run, I'm hoping, would be about a 9-point run, 10-point run, somewhere in there, maybe even a 12-point run, if we're super, super duper lucky. And I waged that against the probability of getting stopped out at about 3 points. We broke that resistance, or we broke that support level, and we were on our way down. I don't know what's going on here. We might be entering into some consolidation. We did right here. You see we have a wick here that was testing this 1633 area, and it didn't, you know, it didn't close out on the 1633 area. We're actually a whole point up from there. So we have this nice little long wick. So we could be moving back into the opposite direction. I don't know. Let's see what happens. I know one thing for sure. This obvious support level before it was down here, a little below there. Now, the interesting thing about support and resistance levels is a lot of times they come out on the whole number, you know, or close to the, you know, real close to the whole number. Well, I guess a lot of things are close to the whole number. If you're a quarter over either way, there's only the half that's not. But you'll see a lot of them come out, you know, on whole numbers. That's because people set their stops on whole numbers, 1635, 1634. I like to look at a level. If I'm going to place a stop, you don't want to place a stop in the middle of your support and your resistance, okay? You want to place your stop outside of the current support and resistance, and you don't want to do it on a whole number. So if the stop just right outside the current support and resistance lands on a whole number, take it up another quarter of a tick, or a quarter of a point rather, which would be a tick. That way, you're less likely to get stopped out on just a real small movement. We're at 33, currently at 33.50. Our 20 EMA is coming down. I was going to say earlier, and I forgot to mention it, this 20-minute EMA, let's look for it to cross the 90-minute. If it crosses that 90-minute, we could expect it to continue to go down. Now, those moving averages are a function of the price. So it's not the moving average that's pushing the price. It's the price that's moving that moving average. So your moving averages, the shorter-term moving averages, are more erratic and move sharper than the longer-term moving averages. And if your prices are coming down, then those two are naturally going to come together. That's just a function of the price, not the other way around. However, once they do cross, just by the nature of trading, you'll typically notice the pattern will continue. So if it's strong enough to make those cross, then the trend may be strong enough to continue to go down. Oh, we had a little downward movement. Went down there. We're at the 31.50 area. We're at the 31 area. So we have a little movement down here. We moved down past the area that was being tested. Got a couple little funky things going on with my screen here. My pointer is acting funny. We had a little downward trend reversal arrow come in. Again, we don't trade those arrows, but we see them, pop up from time to time. We might see them consolidate in an area. We might see them, a lot of arrows come in that indicates a trend reversal or the end of a trend. Don't let them confuse you. We don't trade on them, but we do take note of them because things are going on. We're down at 1630.50. 1630.50. So we're down in this area here now. Look at this support level right here, right in the 1630 area. We're testing past it here. Let's see what happens. Let's see if we can test past it. It might consolidate for a while in this area, trying to get past this level. Let's see what happens. And what I'm going to do at this point, because I'm down 5 points below, I'm going to go ahead and move my stop. I'm going to go ahead and move my stop up to 32.50. 32.50. So that way I'm guaranteed a profit. I'm guaranteed a profit of 3 points. Okay? Now, interestingly enough, usually we don't in the forum, we don't talk about, how much we're trading. I typically am trading 20 contracts. In this case, because it was a very low probability and I'm doing some training here, I reduced that down to 10. So I'm trading 10 contracts. That's $500 at a 3-point profit. That's $1,500 minus my commissions. 5 contracts times, I'm down in the $4 range, so that's $20 to $25. So, I'm making, I'm guaranteed here $1,475. So, that's a considerable gain considering the 2-point gain earlier, which I made $2,000 earlier. So on the 2 points, again, I'm only trading half the contracts here. I very rarely mention how many contracts that I'm trading, but just for those of you who are curious, I get asked that question all the time. I did just trade half of my contracts on this. So now I'm down to the 29.50. I'm going to go ahead and move my stop. I'm going to go ahead and move my stop down now to no, I'm going to leave it the same. I'm going to leave it the same. I'm just going to go ahead and leave that stop. I could very easily get stopped out at the 32.50 area. But I'm going to, because, of this consolidation here. But I'm not going to place it up much past that. I could have placed it up, but I want to eke out a little bit of profit. I'd rather eke out just a little bit more profit, get stopped out, and the trend continue. So we'll see how lucky I get. 32.50 should be just above where it might test out to. We'll see what happens. These moving averages here, you see that 20-minute coming into the 90-minute. If the price goes down such that those two cross, that can be an indicator of even a stronger downward trend. Though it's not an effect of it, or it's not a cause of moving price. The price moves those averages. Don't ever forget that. A lot of trading systems that people utilize, they get the cause and effect backwards. And I'll talk a lot about cause and effect. And the people that I work with, we talk a lot about cause and effect. All that matters is what's going on with that price and those patterns that are being created with a price. We already know we're in a strong downward trend, and we know we've been in a strong downward trend for how many bars. We have a very consistent red bars going all the way down. So we don't even need to look at these ergodics to tell us that we're in a severe downward 10-minute trend and a severe downward 5-minute trend and a 3-minute trend. Because things have slowed up a little bit and it looks like it's trying to consolidate in price. It just went past this point of support here, down a little bit. So we have a 1-minute ergodic kind of moving up. That tells us it's trying to consolidate. But we already know that it's trying to consolidate. Why? Because we're looking at this movement of price, or lack of movement of price. Okay? Now remember, these are 5-minute bars. These are 5-minute bars, So every time, each one of these bars represents 5 minutes of movement. Sometimes some of the newer traders forget that. So we're seeing what goes on in that 5 minutes. This is a real good representation of what happens in each of the 5 minutes. So this 5-minute here, there was a lot of movement from the top to the bottom. 1, 2, 3 from 1631 and a half all the way down to 1629. Okay, it's a lot of movement, but the opening price was, or the closing price was just below the opening price. Just below the opening price. Here we have a lot of movement, but right this second, the closing price and the opening price were the same. Now the closing price is just a little bit up. Now they're the same again. You see, up now they're the same. So before I can even get the sentence out, now the closing price was a little bit higher than the opening price, as represented by that green bar there. Are we looking at a reversal, or are we looking at a consolidation? Well, we don't know. There's some indication that we could be looking at a reversal because of the length of these pins underneath, the length of the wicks. You know, it looks like we could have a reversal, or I was very close to being stopped out there, but I'm not worried about it because I'll take a 3-point profit. I'll take a 3-point profit any day, every day. Any day, every day. I'm at 1632.25. I am very close to getting stopped out. I'm a quarter of a tick away. So I'm just going to hang on. If I get stopped out, I take my 3 points and I go. Do I want to move my stop back? Well, that goes through my mind. Hey, let me move my stop back a little bit because I'm so close to it and it's toying right next to my stop. I can move my stop back and hope for a trend down. But you know what? I made the decision, 10 minutes ago in that location. So let's not move it. Let's not collect the gambler mentality. And you can see my video on the gambler mentality. We're not gamblers here. We look at the probabilities. We look at how much we're willing to risk on a particular trade. In this case, I was willing to risk 10 points on all those indicators that were telling me that we could be moving down a little bit. Oh, we had a green bar. The green bar, again, we had an entry price, and it went way down, and then it came up, went way up, came back down, and then it exited at a higher price than that bar started out at. Is that part of a trend reversal? I don't know. I don't know because I have a little bit of a shadow on the other end of that bar. And I also don't know because I can't predict the future. All I know is that if I get stopped out, I take a 3-point profit. And that 3-point profit. Now, since we're trading the E-mini, okay, the S&P E-mini 500, each contract is worth 50 points. It's indexed on a 50-to-1 ratio to the S&P, Standard & Poor's 500. So if we move up 1 point in value, our contract price doubles. So if I'm trading 10 contracts, then I'm trading $500. When I move up 1 point, I make $500. I move up 2 points, $1,000. But if I lose 2 points, I lose $1,000. So this is how we make our living. I'm really close to being stopped out, so I'm fully prepared to take my 3 points and walk. If I'm trading 5% of my portfolio, you don't really want to ever trade more than 5%, and that can even be high. You might want to trade 2% of your portfolio or 3%. When you first start off, you only want to trade a couple contracts for a few weeks until you're very, very comfortable. Then you might trade 2 contracts for several weeks or months even till you're comfortable trading. Because once you get done trading in the simulator, We call it paper trading, even though you're not trading on paper. Once you get done paper trading for a couple of months or 1 month, whatever, and you start trading money, your mentality changes. And the reality of your trades come in. When you lose, it hits you a little more. It's kind of like playing poker at home and then going to the casino. Once you start playing with that real money, the game changes a little bit. So you really have to make decisions and stick to them. If I wasn't on the mic and talking to you, would I move that stop up? 5 minutes ago, I probably would have wanted to. Right now, I don't think I would want to move that stop back up because it looks like the price may go back up. There's some indicators there that, there's some consolidation and resistance of the price dropping. So it may go back up. I'm only actually a quarter of a tick away. Usually it would hit me and stop me out because I'm not very lucky. I just have to, manage my losses. And that's what you do, manage your losses. But, 10 minutes ago, when I was talking about that stop being a quarter of a tick away, I wanted to move that stop up, give myself a little more room. But you know what? I'd rather take a little more profit than give myself a little more room. You'll hear this said a lot, to not be in a trade and wish you were than to be in a trade and wish you weren't. So that's a very popular saying, and we'll talk about a lot of other popular sayings, like the trend is your friend. We, we want to watch the trend and trade with it. That's what the delta trading is all about. Look at these moving averages coming together. What does that mean? Well, it doesn't mean anything's going to happen because these moving averages are a function of the price, like I said, not the other way around. But we do see them cross. As they cross, other people with other moving averages are going to notice that they're crossing, and it may excite some things to happen. We'll have to see. My screensaver is giving me some problems today. I don't know why it wants to go out. And my screen recording software. I have a lot of things going on here. I actually have a laptop that's running 3 23-inch external screens. I'm recording off of the center screen. So not only do I have the recording software going, I have the audio software going to help regulate my voice. I have some other statistical software that's running in the background. And then I have my screensaver that wants to keep popping up every minute and a half. But I wish it was doing it in a slower part of the day. I don't know why that screensaver is wanting to pop in and out like that. So I hope it's not messing up my recording. It's very sensitive when you have all this stuff going on at one time. We have 3 tests here of this level. It's actually a quarter point off of my stop, which is amazing to me that I haven't been clobbered on the head yet by the stop gods. It's rare that you're going to see me get that lucky. But I'm not complaining. I'm not complaining at all. So we're at 631.50. If I were to place an order right now to get out at 631, I would have made 4 points. But that's just ifs. While we're waiting for something to happen, we can take a look at this little price histogram over here. A lot of people would interpret this differently. We have this nice little curve here. We have some items that aren't filled in. We have a lot of area here that's not filled in. But what's interesting is from 1629, right in this area, it may start filling down here. and that wouldn't be totally out of the norm. Our value area is right here. This is our value trading area. Now, I said this is our value trading area. That's if you followed this chart a lot. Remember, this is historical information. It may be just a few minutes old, but it's still history, okay? Our actual value trading area is what we're trading at now. This is what's going on now, down here, not up here, even though this is kind of this is where most of the action was throughout the day, that sort of thing. But what's really going on is going on here, as reflected by the price. Again, we are mostly price action. I do have some of the indicators down here, such as the ergodics. Again, ergodics are very complex. They're just averages of averages. So you can get some good trending information out of it. In a good trending market, you see how this 5 minute here kind of oscillates. You have a sine wave pattern here. That's what you're looking for in a good trending market. You're looking for that downtrend, uptrend, downtrend, right around the center line there. So, following our 5 minute action, we see that our 5 minutes were trending kind of neatly. Okay. Oh, our 20 minute across the 90, real nice. It looks like we're down at 1630.50 now. So that's kind of interesting. Remember, if I were to place a sell order, or actually a buy order now, because I sold, and to complete that round trip, I have to buy now, at 1630, it probably wouldn't fill right at that 1630. And once you start trading yourself, you'll notice that, the orders don't fill. You hit that button, it might fill a quarter of a point or a half a point different than what you hit that button at. So you have to kind of account for that when you're trading. A lot of people think, oh, I'll just wait for it to go up a quarter of a point and hit the button. That doesn't quite work that way. You got to give yourself a quarter point, half point leeway. So 1 or 2 ticks. You could be off 1 or 2 ticks. Usually a tick, depending on, the movement, how quick things are moving. If that little price arrow is bouncing around a lot, and you hit that button, you might hit it off a quarter tick of what you thought, and then it fills a quarter tick difference. Oh, here we have a little trending happening, going down. I'm looking at about the 16. I'm looking for it to come down below that 1629, 25 mark where it's at. I'm looking to go down a little bit further from there. If we go down to 1628.50, I'm going to move my stop down. If we go down to 1628.50, I'm going to go ahead and move my stop down. So I'm going to kind of get ready. I'm going to move my stop down to 31. I'll move it down to 31.50, which is this area right here. I'll go ahead and move it down to 31.50. So 28.50, I'm going to go move it to 31.50. So now I'm dealing with 4 points, a 4-point gain. Now I know earlier I said, well, I'm going to make up my mind and keep that stop where it's at. Well, in this case, the price went the other way, so I'm going to go ahead and move my stop down, get another point out of it, and I'm going to leave it. If it starts creeping back up toward it, I'll just get stopped out and take my 4 points. That'll be a $2,000 profit at 10 contracts. Why wouldn't I want to do that? I won't move it back up the other way, because then you're just chasing the market. Right now, what I'm doing is I'm doing a trailing stop. As I'm making more money, I trail that stop. And I'm up at 31.50 now, which is right here. Why did I say 31.50? I didn't want to say 31. I didn't want to say 30.50, which is a support level, little mini support level. I wouldn't really call it a support level, but that was a level that was being tested. And I don't want 31 right on the stop, and I don't want it necessarily just a quarter point. I'll take a half a point. Whether this quarter and this half matters that much, who knows? I'm at 27.50 now. We're going down the 27.50. I'm going to move my stop down again. I'm going to move it down to 29.50. I'm going to move my stop down to 29.50. So break out a calculator there. I'm going to move my stop down to 27.50. The reason I'm going to move it down to 27.50 is because that gives me 8 points. That gives me 8 points. So if it goes back up, I'll just take my 8 points profit. That's at 10 contracts, that's $4,000. So I would rather just put that in the bag because we could take a sharp trip back up the freeway just any moment here. And I don't want to take that sharp trip back up the freeway and lose the profit that I just gained. I'd rather move my stop down. Now, why did I move it down to that level? Down to the 27.50? Because there's profit. There's nothing in this entire area that indicates that anything would happen. But if I look way over to the left, I see a consolidation range right in here in the 26 area. So I'm going to go ahead and I'm going to target it. You see how it's testing down here at 26? It's testing at the 26, and it's at that kind of consolidation area over here to the left. That tells me those are significant pricings. What I'm going to do is I just accidentally hit my buy market order button, and I just filled at 1626.50. So I guess that's the end of my run here at 9 points. So I guess I can't complain about that. So we're doing good. Let's see what the rest of the afternoon has in store for us.